Gears, and we're talking about your investments. When investing, a lot of people don't consider the psychology surrounding the realm of finance. Joining us now to talk about just that is the president of Wilsey Asset Management, Brent Wilsey. Brent, good morning. Great to see you.
Good morning. Good to be here.
I guess the first thing we need to acknowledge is investing is counterintuitive, right?
It really is, and the mind can play some very sad tricks on people when it comes to investing. And one thing that people don't realize is that when they have an investment, it's gone down, they want to keep saying, no, it's okay, it's going to come back, it's going to come back. The reason for that is they don't want to admit that they were an idiot for buying that in the first place, and if you keep holding it and holding it, you never have to admit that. So they don't want to do that, so they just keep holding. And they lose money. They're missing out on other opportunities is what happens, Jason.
That's because they're getting emotionally involved in a lot of cases, right?
Yeah, and they're blind to the fact that, okay, get rid of that investment. It was a bad investment. Take your loss. Look for a good investment. This is where people do get confused as well, is because we invest with emotions. And one sample we had here just recently with a company called Sam Adams Boston Beer. Gosh, they were high like $1,350. Like, oh, it's so great because it had Truly, the hard seltzer. Well, now that stock trades at about $585. And it's because of the fact they got over emotion. They'll hold things too long as to realize, like, no, this is too expensive, or this investment is not a good investment. I have to look at buying something else. And it's hard to many times admit the fact that you were wrong.
In the most simple way to put it, is it just better to buy on bad news and sell on good news? That's what we've been taught.
It's true. It's what you're taught and what happens when you do that. And we look for companies that have bad news, but you've got to look at companies that have what we call short-term bad news, to where it's something that's fixable over the next, we'll say 12 to 24 months, because you don't want to get a company that has bad news over and over again. You'll never make any money. You got to make sure it's bad news that's not going to last. And the other thing, too, I want to point out here also, is that when you have an investment and it does drop, ask yourself the simple question. I learned this, gosh, probably 30, 40 years ago. If you didn't hold it today, would you buy it? And if the answer is no, then get rid of that bad investment. Don't keep holding and make excuses. You've got to move on and find a much better investment.
But you also recommend that before you invest, you should ask yourself the question, what could go wrong?
Yeah, exactly. What can go wrong? We do this for our portfolio, for our clients' portfolios, all the time, every single investment, because you get excited like, wow, this is going to be so great and so forth. Stop and step back and say, but what could go wrong? Do they have a distribution problem? Do they have a marketing problem? Will they run out of cash? Maybe there's competition coming in. Ask all the hard questions before you make that investment. It can save you a lot of money in the future, because many times we get so excited on the good side, we fail to see what could go wrong with that investment.
So if you have a good investment and you decide, okay, it's time to sell for whatever reason, now you've made some money, you've got some proceeds, how do you figure out what to do with those?
What you want to do is saying, again, you have that investment, you've lost money on it, as opposed to keep holding it, saying, if I sell this investment, what can I do? Can I invest in something else, use those proceeds and make more money, as opposed to staying there for months and many times years with this sour investment? Move on, find a good investment. Again, we use fundamental analysis, and that's why we always say no emotions, just results when it comes to investing, because there are good investments out there. Sometimes you have to be patient, but don't tie up proceeds that you have for months and years in a bad investment. Move on, find a good quality investment to invest into.
Okay, tell us about the coffee mug analogy.
Yeah, this is great. This is from a professor out of Chicago. I believe his name was Professor Taller, and he compared coffee mugs, and he said that if you had a mug, you'd pay like $2.87 for that mug. Now, if you were offered either cash or the mug, well, it's worth $3.12. However, if you own that mug, and people ask you, well, what is that mug worth? Well, people said, well, it's worth $7.12. It's proven that when we own something, including a stock, we always think it's worth much more than the market think it is worth. So that study was a great study showing you how your mind can play these games, because that mug was not worth $7 and when I say 12 cents, but because you owned it, you think it's worth more. That happened with people with the Boston Beer, the Sam Adams. They thought it was worth more than it really is, and this happens all the time in investing, and this is why the average investor for the last 20 years, they've averaged about 2.2% because of emotions. Get rid of the emotions when it comes to investing.
Okay, that's good stuff. Brent, you're back to in-person seminars now, right?
We are back to in-person seminars, yes, and we have one coming up. I believe it's September 26th. I believe it's a Thursday is the next one coming up. They can check our website at smartinvesting2000.com. A lot more information there. Great newsletter, too, to help people out with investing also there.
Yeah, really. And are you holding seminars on the boat? I saw your new commercial.
No, I get a secret. I get a little bit seasick on the boat, so that commercial is kind of hard to film because I'm a little bit dizzy doing that.
I got it. All right, and the website?
Smartinvesting2000.com.
All right, Brent Wilsey, Wilsey Asset Management. Thanks a lot, Brent. Great stuff.
You're welcome. Thank you.